You said, I don't think they're going to be able to. What do you mean by being able to?
Well, $70 oil this morning, right? Inflation is going to come down, right? I don't think they're going to get to the 2.5% number that everybody else wants to. It's ironic that you watched oil come all the way down, which should put downward pressure on inflation, and yet yields have just stayed right where they are, right? They haven't budged a bit, right? Let's call the 10-year 4.5 and 421 on the 2-year, right? All else equal, those things should have been coming down as you reprice inflation expectations down, and they're simply not, right? Which is why the long end, we think it's going to stay higher. But eventually, can the Fed increase rates one time later this year, or maybe two? One time is just symbolic. It doesn't do anything really for monetary policy.
What do you think the communication of the last week is just symbolic?
Yes, I think it's part of Chair Walsh establishing his independence, new sheriff in town, right, and wanted that message to come through. Obviously, it's been well discussed, all about price stability. Didn't hardly utter a word about the labor market, right, or anything associated with it. I do think the interesting thing, though, as we get into the second half of this year, is this kind of juxtaposition between economic growth, which has been really pretty soft, right? I mean, remember, fourth quarter was 0.5% for the U.S., 1.6% in Q1. And then you got this earnings growth that's 20, 25, 30% parabolic, right? You usually don't have that environment. It's a really unique environment.
How predicated is your 7,900 target on the S&P on the idea that the Fed will not be able to hike rates?
It's priced in there, yeah. I mean, I think we have 0 hikes for this year. So we have Fed funds staying exactly where it is. And part of getting to 7,900, in fairness, is that 0 hike. So if they hike the 40 basis points that's priced into the Fed funds futures curve this morning, then I think that number has to probably be lower for 12/31.
Do you think right now the equity market is saying we don't believe that the Fed is going to hike rates, and the bond market is saying, oh no, they're going to hike twice?
Yes, but that's always the case, right? I mean, and look,
so who's the smart money?
Everybody is so wound up, this week, this morning, yesterday, about this tech sell-off, and it's not a sell-off, right? I mean, if it was a true sell-off, banks wouldn't be breaking out, REITs wouldn't be breaking out, small caps wouldn't still be doing well, credit spreads would be more.
You think it's a rotation within equities, not outside?
It's a rotation within equities, and that's all it is, right? And you shouldn't play it for more than that.
Is it a buy the dip moment for these names?
Yes, but we think there's probably more weakness coming through the summer months, right? I mean, I do think when you get into Q2 earnings season, the bar is so incredibly high, particularly in the tech sector, that I think there's some disappointment there in price. You get into some seasonal period of time. So I think you'll get a cheaper moment to put that next marginal dollar to work in the tech sector than today as we're sitting here. But we still like that sector overall as part of what we don't like is small cap. And what's interesting is, so Friday we're going to rebalance the Russell indices. The top 10 names in the Russell 2000 small cap all don't justify being there anymore. They're all above the high water mark for what they should be, right? So they should all graduate to mid cap or large cap or whatever. And that's 47% of your small cap return, right? So if you let that go, and they won't do that all at once, but if you let that go, you're just continuing to dilute the integrity and the quality of that index.
Well, let's finish with what you do like. I know what you like. It's financials. It's
Yes.
one of your core calls for this year. At times this year, it hasn't really worked.
It hasn't worked.
Why do you think it's going to start working?
All the fundamentals are there. Part of it is predicated exactly on what we were just talking about, the steepening of the yield curve, right? Because financials do very well on the steep yield curve. Obviously, when you look at the big banks that benefit from sales and trading and investment banking activity, that's hitting on all cylinders. We know what M&A is doing. We know the IPO environment.
Morgan Stanley, Goldman, those names doing great.
They're doing great. I think what's not doing great, it's ironic as you start unpacking, the financial sector at the lower levels. What's not doing great are the payment processors like Visa, MasterCard. What's not doing great is Berkshire Hathaway. What's obviously not doing great is some of the alternative asset managers. So it's a very, very bifurcated world. If I look at the large and regional banks right now, they're actually sitting close to highs and breaking out from here, right? But in fairness, it's still one of the few GIC sectors. As we came into this morning, there's 4 GIC sectors that are now negative year to date so far, right? Most people wouldn't realize that when the market's been as strong as it has been.